First of all, thank you very much for everyone being here. We absolutely understand that we're keeping you from all the fun side events and all the drinks. So thank you for joining us today. So we're going to rapid fire some questions, and we'll keep it a little informal so that way we enjoy our evening today. Okay, so we'll start off with some introductions. My name is Sufian Zaman. I'm with Ironlight. So in my career, I've worked on the T0 placement, and that was my first opportunity to get into blockchain and understand what the market was putting out. On top of that, I worked at Securitize, and now with Ironlight Group, we tokenize funds, and with that, our ATS, the trading aspect of the ATS. So I'll go ahead and pass this over to do some quick introductions. Gentlemen?
Yeah, so I'm Tesfaye. I'm head of capital markets at Aptos Labs. Aptos Labs, if you're less familiar with it, is a highly scalable blockchain, layer one blockchain. Also, it's developer friendly, as well as it's built on Move. And then in terms of my background, just put that in context, my background is primarily investment banking, venture capital, and operations. It's a pleasure to be speaking with you.
Hi, thanks guys. Harold Duineveld, I represent Archax. Archax was built on the vision that all assets will have a token or have a on-chain representation at some stage. 2018, we did our Series A in 2022. Aberdeen Asset Management led that Series A, and the vision was also that we needed to do an institutional edge. So we had to do regulation from day one. So that was our angle. So the best thing is that we are uniquely positioned when we have the traditional security permissions plus the digital asset permissions. So that sort of, we try and bridge the gap between traditional and digital markets. Yeah. And why I got involved is because I really believe that DLT and blockchain technology will just change the face of finance. Radically. We're all like stuck to these like incumbent weekly closings and exchange opening hours. I mean, one thing we can all be a bit like skeptic on maybe BTC and ETH on what it is, but it trades 24/7. It never broke down. It's there. It settles on immediately, also in the weekend. So that's the next step, I think, for tokenization and financial markets and products, I think.
Absolutely. Great introduction, gentlemen. Okay, jumping straight into the panel. Where are you guys seeing more of the tokenization activity today? In the private markets or the public markets? And what are the trends that are causing it?
So most of the activity currently I'm seeing in the private markets, and that's for a number of different reasons. One, just because there's incumbents that are much more prevalent, much more embedded in the public markets. On the private markets, we're seeing very specific use cases, whether it's on the fund tokenization side, whether you've seen a lot of the high-profile money market funds. On the serial issuance side, whether it be asset managers looking to onboard and actually distribute a wide range of products and types, whether it's on the fixed income side, equity side, or something a little bit more esoteric. The public markets specifically, we've seen more bespoke opportunities where they're looking to actually create a blockchain offering that complements their public offering that they already have in the market. There is active work, more so that's been incubated within different exchanges where they are looking to leverage the technology in a much more robust manner. But right now, private markets have been leading the way in terms of the applications, at least from what we're seeing from an Aptos perspective. And then there's a lot of opportunities to drive efficiency within the private markets because right now a lot of the efforts are very, very fragmented in nature, whether it be from a liquidity perspective, which is of course one of the many promises of blockchain, where there's oftentimes more of a fragmented approach around liquidity pools. There's not this smart order routing that is basically taken for granted within the public markets. And then also you're seeing different applications within the fund side of things where fund managers are viewing this as an elegant solution to potentially reduce the need for redemption opportunities or redemption offerings because they view this as a way where they can allow for basically reducing the friction between different investors around transferability of their positions. On the private side, setting aside funds for a minute, on the private equity side, you're viewing it as quite attractive, potentially capturing a liquidity premium. Investors that are more inclined to invest in private assets in more fragmented amounts, if they're also able to get the benefit of some type of liquidity dynamics by leveraging some type of trading environment or similar infrastructure.
Good point. I think we see, and I guess you'll read the press, that most activity at this point in tokenization we see in tokenized cash products, like whether it's a USD or tokenized treasuries or tokenized money market funds. That's, I think, where the activity will still flow. And I'll get to another good use case, because we tokenize money market funds. We have distribution agreements on our website. You can see that we tokenize, or we have distribution agreements with Aberdeen, BlackRock, State Street, Fidelity, and a few more in a couple of months. The process for our clients into these money market funds is still quite archaic, so to say, because if you want to subscribe into the fund, we'll do that for you. We'll get the subscription back, ring fence it in our custody, and tokenize from that point. Redemption is vice versa. So it's not ideal. It's very far from ideal. It's not a market. You can't click on it. It's not a real clickable market. We still thought we had to do this because it works, especially now there's, euro trades around 3.7, dollars around 5, right? So it's a good yield product to have, also against some of the stable coins that don't give you anything, right? So, and that's one of the next use cases that we see for money market funds. We're talking to banks in London on maybe doing a collateral network, so that you can actually go risk off on a Saturday afternoon and flip into a money market fund instead of your stable coin. That is a thing that's happening. It's going to happen. Yeah.
Oh, phenomenal. How would you say your teams are addressing the needs of the private market right now, as you guys are both talking about more private market transactions?
So we really take basically a four-pronged approach. One is asset connectivity. So you need to, of course, build relationships with issuers that are issuing this product, whether it's asset managers, whether it's individual counterparties that are actually putting product into the market. And then we may do this directly, depending on the scale of the opportunity, or we may do this through partners that already have that connectivity within a particular region. Then there's also forming relationships with native blockchain companies that have the appropriate licenses that are typically jurisdiction specific, like Archax, for example, where they need to have broker-dealer licenses, secondary trading licenses, custodial licenses, fund admin licenses. Depends on, of course, the nature of the transaction. So that's typically very jurisdiction specific rather. And so we need to basically get coverage from that perspective. Then there's distribution, which is oftentimes not emphasized in this environment, where someone will just tokenize product and think it's going to sell out, and that's just not the reality. And so what we also are working with is working with different placement agents, investment banks rather, in the particular regions that already have proven distribution, so that we can kind of match product or back into the right products for those distribution networks. So that's a huge effort. And some of these are just traditional players that distribute product. Others are individuals that have, or counterparties that have connectivity that need to leverage a broker-dealer through like a broker-dealer of record type of relationship. And then the last piece is advisors. There's an education piece, whether you're talking to counsel, whether you're talking to accountants, that tokenization brings into fold. So rather than having to amend a lot of this documentation, like the offering material and so forth after the fact, so it is conducive for tokenization, and let alone secondary trading. We really like to get early on in the process. We like to get involved in those issuers to kind of educate them and educate their advisors on exactly what are the advantages of even pursuing this in the first place.
Yeah, great points. Just rolling back still a bit on why these asset managers are working through distribution agreements with us and others in the market. It's like 4 years ago, and this was one of our shareholders that told us this, they still had a lot of internal convincing to do because everybody thought that DLT and blockchain was in the same corner as Bitcoin, which was why they didn't do anything. Slowly and slowly, I mean, there's been a realization that DLT and blockchain is something very different and it's a business opportunity really for them also. And when we speak to the asset managers, they see that there's more distribution for them because they feel they can be opposite. They can find other customers that they wouldn't have been able to find before. Two is there's the operational efficiency that's humongous for these people. So that is the driver for them to engage with us. I mean, if we speak with the asset manager, they don't talk about cryptocurrency. It's about how can we use you to sell more. And I spoke to a family office just the other day, very, very, risk averse. And they are now also embracing DLT and blockchain technology just to be able to try and sell more at lower cost. So for them, it's a real business driver. Yeah.
And just to piggyback on that, really, at least in my experience, there's 3 areas that cause anybody to pursue tokenization of anything. Really, it's either operational efficiency, where they're saving, so there's some cost savings involved, but primarily it's greater distribution, or they could distribute more unique product, right? Aside from that, I haven't seen too many other scenarios where people are pursuing tokenization in the first part. So in absence of actually addressing the distribution piece, of course, you can have cost savings and keep everything status quo, but just incorporate the technology, and there should be some cost savings from that standpoint. Right now, you see sometimes the way that's being implemented, there's actually, oftentimes there may be actually an increase in costs because it's not being implemented all the way through the whole value chain. But setting that aside, really a lot of the value is in distribution. So just tokenizing a product in absence of having a solid distribution strategy really is not going to do anyone any good. So that's something I want to overemphasize, and that's why, at least at Aptos, any product that or any counterparty we're looking to engage with, and let alone fund or provide a grant to, we need to really understand what their distribution strategy is of that product so that it doesn't hit a wall once it hits the market.
And there's one more point, and this is why you'll see when you and I go into money market fund, we call our BlackRock, there's a 500 million hurdle, right? In the distribution agreement that we have with them, there's no hurdle, it's zero. So it's also a democratization and inclusiveness of finance. And it's not that they're arrogant and want to have that 500 million there. It's just that they can't cope with the wave of people that could potentially hit them and to do the KYC and the customer due diligence. So we have a wholesale relationship with them. Our customers, we do the KYC on, and then we subscribe into the fund. So we take away all the burden for them. So all of a sudden, boom, hurdles are gone, and we can take clips of $5,000, euros or pounds. So that's
incredible.
And
how
that's
the
an
team is
access.
set.
That's an access thing.
Yeah, no, absolutely. And at Ironlight, we're working through the distribution and the liquidity piece of it through the ATS. So I completely understand those pain points from you, gentlemen. Okay, so now that we're seeing given that the transaction are happening more on the private markets, what are your perspectives of adaptation in the public markets for tokenization? Harold, I'll let you go first.
Yeah, thank you. I always go back to the example of who doesn't want to trade Nvidia on a Sunday afternoon, right, from his phone, and how far away are we from that point? I'd say pretty far, because I mean, on the one hand, you have the crypto exchanges that could do this 24/7, token liquidity, organize the markets. On the other hand, it's a regulated product on a SEC, whatever regulated product, where the connectivity and where the connectivity is still owned by like the likes of ICE, New York Stock Exchange, whatever you want to call it, with their weekend closings, exchange opening hours. So it will happen, and this can be solved because we've seen it in BTC and ETH. I mean, it happens. It can be done in the weekends. So Nvidia on a Sunday afternoon, it's going to happen. But it's also a chain, an industry that's slow to change, really slow to change.
And when I think of public markets, I kind of split into two. There's public companies that trade on an exchange, and there's public companies that have gone through the filing and they provide public disclosure. So you don't necessarily need to be on an exchange to be a public company, right? So like you have, non-traded public REITs, for example. They don't trade on an exchange yet, they're public. And so I think there's going to be a lot of counterparties that want to leverage blockchain, and they want to have broad access and availability of the product, to Harold's earlier point around democratization, where they're going to provide public disclosures so then they can enable retail investors to participate, yet they may not be on an exchange. If you're on an exchange, you're definitely going to need to be plugged into the right incumbents. For example, whether it's DTCC or you mentioned ICE and some of these other different counterparties where you're going to have that connectivity. Also, I think there's going to be some public companies where they may just have a blockchain strategy. For example, I may be going off into a tangent here, but essentially there may be some companies where they're like, well, I want to give my investors pure play exposure to a certain aspect of my business, one of my subsidiaries. And they may actually do a private placement for that particular subsidiary, tokenize that private placement, and enable direct exposure of that particular underlying subsidiary for their investors. Because you may not want to invest at the parent company level because it's a very diversified company. So there may be at least not black and white, public versus private. There may be a hybrid approach where you may have a private actual offering that's trading potentially, or it could just be a private offering that's tokenized, where you're giving people pure play exposure to a specific aspect of your business, but you still have your public company that's either trading on a formal exchange and so forth. But I do think over time, inevitably, just based on the value that we know blockchain brings to the equation, I do think that blockchain will penetrate into the traditional financial system within the exchange environment as well.
And that just takes on-chain settlement, on-chain issuance, and that's not going to happen tomorrow. Yeah.
Completely agree with you, gentlemen. And I think both of you alluded to some different types of assets that you see going to tokenization in the public markets first. What are your thoughts on that? What type of assets do you see tokenizing in the public markets?
At least from my perspective right now, it's been primarily funds and private credit and other cash flowing related products at this point in time. Where there's some level of uniformity globally around the product type. So you see a lot of activity like fixed income and so forth. I think that's going to be the foreseeable future. And then I think people get more exotic over time into more esoteric products. Of course, everyone loves the thought of art being tokenized, music being tokenized. But I think the thing is distribution becomes a factor. Already in the traditional sense, when you do anything within art, film, any of these esoteric players, or assets rather, there's very few partners that you could partner with from an investment bank or placement agent perspective that can actually distribute those type of products. So let alone when it's in tokenized form. And so I think it's going to be very, very simple products, funds, private credit, fixed income in general, that are going to dominate real estate. If you think about like non-traded REITs, as I mentioned earlier, that are going to be kind of at the forefront. And then I know we haven't touched upon in this conversation, but obviously stablecoin and all these other basically money movement is also going to be very important to really basically ensure that you get the full instant settlement kind of benefits that blockchain brings to the equation, because financial products is one leg of the equation, but then of course money movement is the other leg of the equation. So these are all related topics, but to answer your question, those products I think are going to be the foreseeable future. And it seems to be the trend when you think of whether it be BlackRock with Biddle, Franklin Templeton with Benji, money market fund, or any of these other particular products.
Agreed. Yeah, exactly. I mean, when you say you're in tokenization, suddenly you get the weirdest questions, because we've been approached for like collectible cars or tokenizing collectible watches or the weirdest stuff. I mean, we try and keep the finance and financial products. So anything with an ISIN code, that's what we go for. And when we speak with our asset managers and the asset managers that we tokenize for now, I mean, it's not going to stop, they feel, with money market funds. So private credit, private equity, they have funds listed somewhere, a private equity fund, which we could tokenize in the same way, right? I mean, tokenizing the asset itself, the private equity fund itself, is still a stretch. So creating liquidity at sort of at a level where it's not the fund itself, but that we're doing right now. So That should be working. And well, real estate. And again, we were talking about this when we moved over here. We also have to realize that putting something in a token doesn't suddenly make it liquid or like clickable.
100%.
So you'll have maybe your real estate Tuesday, or like organizing auctions where you could do this instead of having 24/7 open markets that are lit. So we're going to have to organize liquidity and markets in a way that is proper for the liquidity that's needed for that asset class.
And to piggyback on that, whenever you think of tokenized assets, everyone thinks of continuous trading. There's so many different flavors of secondary trading. Continuous is one of them. Then there's block trades, request for quote. It's different types of liquidity is appropriate for different types of assets. You don't need to have everything necessarily trade on a day-to-day basis. And in some cases, you actually want to concentrate the liquidity in a particular day or specific allotment of time. And then also setting aside liquidity for a minute. When you think of like secondary liquidity, you can also think of, aside from that, basically adding utilization to any private position. So think of like, I have an investment in a fund. I want to not necessarily trade out of the fund, but I want to get margin on my position. And so adding other utility-like features onto your private positions that are more novel in nature also adds a lot of value. So setting aside just the distribution initially in the secondary trading, there's so many other flavors of utility you could bring to these private positions that historically were just not even an option. So I think that's there's so many different layers that we should also unpack when it comes to kind of private positions overall.
Great answers, gentlemen. Okay, so as we're coming up to time, I want to leave off with one last question. So when we all get together 5 years from now at EBC 15, where do you see the public markets for tokenization?
In 5 years, here. Okay, well, I'm going to be retired.
Amen.
And don't take this the wrong way, but half of you are not going to be in this industry anymore, I think, because, and that's not meant to be mean, but I think there's a wave of consolidation coming, and that's not just on tokenization, but just on, because we're so dispersed and we're so like fragmented that there's about to be a wave of consolidation also because people need to refinance and still look for money. Again, I think, and coming back to the Sunday evening NVIDIA trading, if you can do this through your Robinhood or whatever app you have, you will not see it's a token. It's just your provider providing you NVIDIA in the weekend. So we shouldn't. I mean, it's all about user experience and how that comes down the line. So you will not see it. Behind, there's a lot of work because you'll need to trade and settle that token in the weekend. And the market maker needs to have his leg into the traditional markets also to be able to offset the trade. So it'll all feel smooth going down the line, I think.
And I'll keep it paraphrased because I know we're at time. Essentially, to piggyback on your last point, I think it's going to start to be, tokenization is not going to be necessarily a topic that we call out. It's like no one talks about electronic trading, right? When NASDAQ introduced that how long ago at this point, just synonymous with trading. So I think the closer we get to the point where it's basically abstracted out, and then everyone views it as just intuitive, of course, we're using tokenization in this capacity. I think that's when we know that the industry has really made strides, where people know that the whole user experience is intuitive. If I open up my Charles Schwab account, I don't know whether a specific stock is trades on NASDAQ or New York Stock Exchange unless I double click and expand and look into it. I think once tokenized products are also distributed in a similar manner through your retail brokerage account, I think that's when true distribution will be achieved, and also that's when the industry will start to really gain some meaningful momentum.
Incredible. Harold, Solomon, thank you very much. Thank you all for joining us today. Have a good one.
Thanks. Cheers.